One of the big talking points in the financial space on account of this GST rate rationalization and the massive reform that has been undertaken by the government is the implication for the insurance space. And of course, term insurance and health insurance premia move from 18% to 0% GST. The question is, how does it affect you? If you have existing policies, does that mean that you will have to pay less going forward? And should you hold off on your purchases to wait for the new rates to kick in? I'm joined by Amit Chhabra, who is CBO at PolicyBazaar.com. Amit, thanks so much for taking the time. Let me get that first question out of the way. What is the kind of reduction that people are anticipating? Because, and I'm asking this because it's not necessarily that simple 18 percentage point reduction. There's also the factor of input tax credit which goes away. And so to that extent, the reduction may not be as much as anticipated, even though companies have said that the implications for them is going to be very material. So they might actually just absorb that hit. What, according to you, will the reduction be?
See, according to me, immediately there's a flat 18% discount on health insurance and life insurance, right? So there's no debate on that. That is going to happen right away as we speak. Post, I think, as probably a few months, etc. pass, the situation will emerge out. If you ask for my personal, feel about this, see, what's going to happen is there's going to be a massive change in awareness. So many people talking about health insurance and life insurance. Imagine, essentially what has happened is the government has come out and said that health insurance and life insurance are almost mandatory products, which is why they have removed GST on them. So I feel that in the days to come, the awareness is going to significantly increase. Hence, more and more people will buy health insurance and life insurance. And I think there is a bit of economic impact on the insurance companies. If you look at it purely financially, you may feel that they will increase prices to match up for it. But we have a feeling that because of the increased awareness, the penetration will increase, more people will buy health insurance, and eventually what's going to happen is that there actually might not be a price increase as well. What happens, remains to be seen. The story will emerge over time. But we are very optimistic that the increased demand may actually more than compensate for the economic impact that is there on insurance companies. So actually there may not be any impact at all.
For the customer as well, there is going to be therefore the most important point from the perspective of my viewer, Amit, is that their policies are going to get cheaper. But let's spell that out, right? Who benefits? Only new customers, or do existing customers also benefit?
Oh, everybody benefits. So every payment that you're making after 22nd of September, that will not attract GST. That is one. In fact, the insurance companies across the board have quickly innovated, and actually even today you can now buy policies at 0 GST. The only thing is the policy will start from 22nd September. So right away, these options are available to customers to pay without GST and get insurance policies. Even if you have a renewal coming up, let's say in the future, that will also not attract GST. If you have bought a policy on EMIs, which means, let's say you've paid 2 months premium to the insurance companies and 10 months premium is left, even the 10 months premium will not attract GST. So practically any payment you make will not have GST as we go forward. This thing is live and already happening. So if you're looking for a no GST insurance policy, you can actually buy it today itself.
Okay, just a clarification. Does this apply in the life insurance space to both traditional as well as ULIPs and term, or only term?
No, so this thing applies to every life insurance policy. So be it a traditional plan, be it a ULIP or a term insurance policy, this thing applies to every life insurance policy. The one thing that I will call out, and it's important, this thing applies to retail health and life insurance policies. At times there are these group policies as well. Let's say the ones that you typically buy from a bank, or from, there are other entities also which sell a group health insurance policy or a group life insurance policy. There GST will still apply because they're not individual policies. But any retail individual health or life insurance policies, it's pretty straightforward now.
Okay, let's get into some of the nitty-gritties here, because ultimately, I think it's important to point out, Amit, that just because a rate reduction is set to happen doesn't mean that you should go out and buy. Ultimately, you should buy because you need it, and that necessity does not change at all. Therefore, even if the price was where it is right now, you should be going out and getting particularly health insurance. Life insurance, of course, depends on whether you have financial dependence. But what is a thumb rule to follow on health insurance? You spoke about your group covers, which a lot of people depend on, but beyond that, what in your opinion is an appropriate cover to have?
See, it depends on a few factors, Alex. It depends on where you live. It depends on how big is the family, etc. So, on an average, what we have seen is if you're in a tier one city, let's say, you live in Delhi, Bombay, Bangalore, Hyderabad, Pune kinds, in these cities, because healthcare is very, very expensive now and it's increasingly becoming more and more expensive, you should look to have at least 10 lakhs per person of coverage. Now, one can argue that, if I'm a family of 4, do I really need 40 lakhs coverage? The good news there is that the cost differential between a 10 lakhs coverage and a 40 lakhs or even a 1 crore coverage is actually very minimal. So the price difference between the two is about 20%. So it's not as if you're paying 4 times the premium. In fact, a very recently launched plan now offers unlimited sum insured. The cost of the unlimited cover is about 20% higher than 10 lakhs. So it's not very high in that sense, right? So I would say if you're looking to buy health insurance, you need not limit. You can buy a 1 crore cover or buy an unlimited cover, which is not very expensive at all. So that is the cover that I would say one should go for. If you live in a smaller, relatively smaller town or city where the cost of healthcare is not very high, I would still say have at least 10 lakhs cover. Specifically, if you're a family or if you're in the senior citizen category, that is the cover that you should look for. Never compromise on cover. There are other ways to manage the premium or reduce the premium. There is a very easy way. You can buy on EMIs instead of buying the entire premium upfront. The affordability significantly goes up. So paying 12,000 rupees in one shot may be difficult, but paying 1,000 rupees every month ends up being a lot simpler for a lot of people.
Yeah, and you can also have a base policy plus a super top up to reduce the cost, can't you?
Exactly. You could do that. There are ways of, now almost every company offers a fairly affordable super top up as well. You could even look to take a deductible in your health insurance policy. So typically for people, especially who have a corporate policy, you would have a 1 lakh, 2 lakh cover at least from your corporate. What you can do is you have that 2 lakh cover and take a deductible in your retail policy, so that the first 2 lakhs are paid from your corporate policy and everything henceforth is paid from your retail policy. If you do that, the cost of your health insurance significantly goes down by as much as 40-50%. So there again you can save money. So there are various means and methods of saving on your premium. One should never compromise on coverage, because that is something that's very penny wise, pound foolish in that sense. You may save a few thousands, but in the long run, it will really hurt you.
Yeah, and on the term insurance part, and I'm talking about term insurance because we personally believe that if you're talking about life insurance, you must talk about term insurance and not money-back policies or investment policies. You need to differentiate between the two. If you're going for the latter, then you need to know that you're going to a product which is both, right? I wanted to ask specifically on term insurance, therefore, what are the rules according to you that should help you determine whether you need it in the first place and how much you need?
See, so two ways one can look at term insurance. See, one is a very, very standard sort of recommended rule that basically says that you should take 10 times your current annual income. So let's say if somebody makes about 10 lakhs today in a year, then you should look to at least have a 1 crore cover, because you would assume a certain growth in your income, certain sort of upscaling in your life, in your expenses, and then based on that, one can look at a 10x kind of a cover. That is one way. It's the old-fashioned way, I would say, of looking at it. However, I would also say that one should look at your aspirations in life. And when I say aspirations, I mean what aspirations do you have for the lifestyle you want to give to your family. And that changes because, right, what we're seeing is a lot of young people really progress in life. They buy a house, they want to send kids to the best school in the city and all of that, right? So one should always also look at what is the aspiration that you're looking at. And there, if you are a very aspirational person, then maybe 10x, maybe 2 less, and then you need to have a 20x coverage. So I think that is, and it's a very personal choice, I would say, because some people may be okay with 10x. Some people might think that no, I want to give a certain lifestyle to my family,
Yeah.
even if something happens to me, and then 20x might be the cover. That's one way. The other way one could look at it is, open up an Excel file and, put together what are the expenses that you foresee your family having if you're not there tomorrow. And where do you see those expenses 10 years down the line? Your kid may want to go to a nice college, maybe go outside the country, so you will need a lot of money for that. 10x won't solve for it today. So, and it's again a very personal choice. So one should always have that picture in mind as well. That do you want your kids to study abroad or study at a fancy college in India?
Yeah.
Do you want them to continue having a good car, etc., etc.? All of those. It's a very personal decision, and one can't have a.
Yeah, not necessarily. And so therefore, Amit, along with those expenses, you should also talk about maybe what you think your earning potential is going to be over a period of time and say, if that is not going to come to pass, how much do I want to put together to take care of my dependents? But Amit, thanks so much for taking the time and pleasure speaking with you. I think we've touched upon some important points.
Yeah, thank you, Alex.
All right, well, that brings us to the end of this edition of Your Money Matters. Thanks so much for tuning in, and do stay tuned. Lots more coming up on NDTV Profit.